This is a short walkthrough of my read of the 5-minute chart of the S&P 500 futures trading session. Going into today's session, I was leaning bullish. Yesterday's regular trading hour session had ended in a trading range, and the open was a continuation of that same range. But the daily chart was looking bullish, consecutive bull bars. The first setup came on bar 9.
Order filled.
It printed as a great-looking bull breakout bar, and I entered long above it. We were sitting at the top of the trading range, which made it a riskier spot, but the bar was strong, and it was aligned with that higher time frame bias, so I took the chance. I had to sit through a pretty long trade. There was a previous double top right there, and that was the logical exit. Instead of taking profit at that level, I held, hoping for a bigger move. That was greed, plain and simple. By the time I manually closed the trade, price had bounced off the double top and was forming a wedge top with 3 pushes up.
Target
I got
filled.
out for plus 5 points. One thing I want to keep working on is scaling in. It would have been completely reasonable to add a contract on a 50% pullback of bar 9. Holding through pullbacks has been getting better for me, but adding contracts during a pullback still feels uncomfortable, even though doing so would often make it easier to get to break even and improve overall profitability, since the added contracts can outperform the original entry.
Order filled.
The second trade came after bar 24 printed as a strong bear breakout bar. Bar 25 gave good follow-through, and when bar 26 closed with 3 consecutive bear bars, I entered short. Looking back, the entry was a bit late. The best entry would probably have been below bar 25. We were already very close to the low of the day, and I really should have waited for a pullback to the bar 25 low first. My plan was to potentially add on if we got a test of the breakout area. I was expecting a possible test of the bigger range from yesterday. At around plus 10 points, the market started showing hesitation. We had just broken out of the smaller opening range of the day. I decided to play it safe and took it off for around plus 10 points.
Target filled. Order filled.
The third trade set up after the bears got their second leg down to yesterday's range low, forming a double bottom, and bar 40 printed as a good-looking bull bar, so I entered long. I was using a wide stop of 15 points to give the trade some room and targeting a 1-to-1 risk reward for 15 points of profit back into the range. The trade took a long time and stalled right at the range low. While my initial target was based on that 15-point risk, my plan was to stay flexible. I was prepared to lower the target or take the trade-off at break-even if the bulls couldn't generate any energy. That's exactly what happened. There was just no energy in the market. Bars were getting smaller and smaller, the move wasn't going anywhere, and the day was getting late. I took it off at around break-even.
Target filled.
Overall, today was a good example of adaptability. Several trades were managed based on changing context rather than blindly holding to fixed targets. The main area to keep working on is balancing that flexibility with discipline, making sure adjustments come from valid market reads, not emotion. Thanks for watching. If you liked this video, don't forget to like and subscribe to the channel.